Last year was all about short-term investments, from the crash and the rebound to individual themes. Everything was fast and the market trader was back after years of losses. But those short-term opportunities aren't over yet. I found 7 short-term investments to make in 2021 that can make you thousands of dollars each. I'll show you how to find these best investments and how to set each one up. We're talking short-term investments for high returns today on Let's Talk Money. Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel. I want to send a special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Nation, in all the chaos of last year, it was actually a really great year for market traders. The market plunged 35% in less than 5 weeks, only to rebound 45% in less than 3 months. It's the fastest crash and recovery ever. And then here, shares of Nikola were the market darling for about 5 minutes before reality struck. So from the rebound plays to IPOs and those shares of electric vehicles, short-term returns were there if you knew where to look. And I showed you where to look in last year's video on those short-term investment strategies, but it's more of a general idea. I showed you how futures, Forex, and some of these strategies work, but we really didn't spend as much time on these specific trades. In this video, I'm revealing 7 specific short-term trades you can make in 2021 to make thousands of dollars in each. I'll detail each, how to set it up, and how much you can make. And I'll be using those same general strategies, but then fine-tuning them for our 2021 trades. Strategies like this put option investment that made me over $18,000 when the market tanked in September, or the 250% jump in the penny stock Veritone after our October video. Now I know you want to get to those trade ideas, but I want to take 1 minute to show you how I found these and how to think about your short-term investments. These 7 ideas will help make you money in 2021, but I want to give you the tools that are going to help make you rich every single year. Now this one is difficult for a lot of investors, including myself, but you have to cut down your analysis of the fundamentals. And it's because, Nation, for these short-term investments, it's much more about that investor sentiment and the herd mentality than it is about those longer-term fundamentals like the operating margin or valuation. And again, I'll admit, this is a tough one for a value investor like me. I always want to analyze those long-term potential of an investment and get the best value, but that's just not quite as applicable for these short-term trades. You have to be able to find the investments that are going to spark that investor enthusiasm no matter what price. Next here is you have to be able to think like a contrarian. A contrarian is just an investor that thinks against the current market trends or the assumptions. And this is a great opportunity that most investors just don't take advantage of. The market, and especially the market for investments that we'll talk about here, like futures and options, it's an auction machine. The stronger the consensus there is on one side of that trade, the cheaper the other side is going to be to take, and the higher the payoff if it ends up being right. But let's get started. And our first short-term investing idea is going to be to short oil in the futures market. Now, I'm not going to go into too much detail on what futures are because we covered that in our last year's video. So I'll just link to that in the video description below. Basically, futures are just contracts to buy or sell commodities, currencies, or even the market index at a future point. And why futures lend themselves so well to these short-term investing strategies is because you can leverage your investment by 10 and even up to 30 times your money. For example, with this trade idea, we're shorting crude prices at around $50 or $55 a barrel. Now, each futures contract is for 1,000 barrels, so you'll put down about $5,000 in your futures account and have a short position on $55,000 worth of crude oil. That's an 11-to-1 leverage, so even if crude comes down by 5% on the price, you'll make a 55% return on the trade. The price of crude has jumped over the last month from about $35 a barrel to nearly $50 for West Texas Intermediate and over $50 for Brent crude, the 2 types of crude traded. It's getting near that $55 to $60 a barrel price where it traded at in 2019, and before OPEC started its nearly 10 million barrel per day production cuts, the largest cuts in history. Now previously, OPEC, the cartel, already agreed to increase its production by 500,000 barrels a day in January, and it's right around that $55 a barrel where I think it's going to start taking off a lot more of those cuts. Because if you look at this research by Morningstar, you see the break-even price for the largest non-OPEC producers. These are companies like Exxon, BP, and Total. Now this is the price of oil at which these companies start to turn a profit. These blue dots are 2020 and the red dots are 2021 estimates. So it's around that $50 to $60 a barrel that if OPEC maintains those production cuts, keeps that oil off the market, These other producers are becoming profitable, so there's no incentive to cut their own production. At this point, the OPEC countries, they're just going to be subsidizing these Western oil companies' profits. So as we see the price of crude oil rise, maybe in this first quarter, if it does get to that $50 to $55 a barrel price, I think you can short crude futures and book a strong 30 or even 40% return just by waiting for news that OPEC is going to increase that production and send prices down a few bucks. We've still got 6 more short-term investments to reveal, but I wanted to personally invite you to get the Bowtie Daily, our daily market newsletter, directly to your inbox. You'll get a daily update on all the trends, news, and top stocks sent right to your email, all totally free. It's something I've been planning for a long time and wanted to use it as a thank you to all you out there in the nation, making it absolutely free and no obligation. So I'll leave a link in the video description below, so just look for that and get your daily market updates. These next 2 short-term investments for high returns are going to be both in the options market. I covered 5 option strategies in last week's video, a complete guide to options trading and really how to use these for not just those higher returns, but downside protection as well. So I'll leave a link to that video in the description, so make sure you check that out. But our first trade here is going to be buying puts or a bear spread on retailers for the first half of the year. The National Retail Federation expects holiday spending was about 5% higher than the previous year, but we've already seen that those online shopping was running 20 and 30% higher from the year before. Now that means brick and mortar stores probably got a huge lump of coal for Christmas if they don't have that strong online presence. Nearly 30 major retailers filed bankruptcy last year, the most in more than a decade. There were 8,000 plus store closures, and the pain isn't over yet. I think as retailers start to see that the holiday shopping season didn't save them, we're going to see another wave of bankruptcy, especially now that the economy is opened up and these assets can be auctioned off. So what I'm looking at here for this trade is retailers without a strong online presence, ones with little balance sheet cash and already high amounts of debt. And I'll use Party City, ticker PRTY, as an example with this short-term options trade. And the shares of this party supply retailer have been falling non-stop since 2018, so it's not exactly a strong business even before the pandemic. And this stock got absolutely destroyed last year, but managed to rebound to about $5.78 a share. The company has just $170 million in cash reserves against $2.5 billion in debt. Revenue for Q3 was back to pre-pandemic levels, but there's no margin here and almost no cash flows. So I can go into the July put options and maybe buy the $4 strike for $1 each, while selling the $3 strike for 55 cents each, or a net cost of about 45 cents per option. That's that bear spread strategy that we discussed in our options video, and means I make a 122% return if the shares close below $3 a share by expiration. Now there are different ways that I can play that trade, selling for a quick profit if the shares tank, or just adjusting the strike prices. Make sure you watch those option strategies that we did in that last video so you know how you're managing this one. Our other options trade for a short-term return is going to be using the straddle strategy for the S&P 500 index. And remember, a straddle is buying both the call and the put options of a stock, so you benefit if the shares move higher or lower by a wide enough margin. And this is the example that we used in that options video, buying the $50 call and the put for a total of $4.57 per option. So you see, we start making money on this when the shares move lower than $45 or higher than $54. So the trade here would be to maybe buy the $370 strike calls and the puts on the S&P 500 ETF. That's the ticker SPY, for an expiration of January 2022. So you buy the $370 strike calls here for $27 each, and then the puts for about $37 each. Now that would cost about $64 per option, with a profit anywhere below $306 per share or above $434 each on the SPY. But the beauty of this strategy is that you don't have to wait until next January to close it up and make a lot of money. And there is still a lot of uncertainty in the market for 2021. It could either be a very strong year with all that pent-up market demand that everyone is expecting, or there could be quite a few catalysts out there for disappointment. And what I think is going to happen, though, is that we get a large market move in the first half of the year that then reverses in the second half, and it could be either way. And for example, if the vaccine distribution is slower than expected and the economy looks weaker, then we could get a strong sell-off in the first half. But there's a good chance that by the second half of the year, that market starts pricing in the eventual rebound and the stocks surge again. Now, on the other hand, if stocks do have a good first half of the year and valuations get even more expensive than they already are, which would be very close to a bubble, then there's a good chance that some of that momentum reverses then in the second half for the correction. So then what you can do with this options trade is see what the first half brings and which side is profitable. If we get that sell-off, then your puts are going to be profitable and vice versa on the calls if the stocks keep running. Then what you can do is sell that side of the trade for the profit, keeping the other side and then waiting for the second half rebound, potentially making profits on both sides. Our next trading idea for 2021, shorting the US dollar in the Forex market. Now this is going to be similar to that futures trade because foreign currencies trade in that futures market. And here we're going to be shorting the value of the US dollar against other currencies, particularly the Asian currencies, Australia, and the euro. Again, though, you can trade futures or Forex on just about any broker platform. I use E-Trade for futures, and you'll go in and you're going to short the dollar against one of these other currencies. The value of the dollar is already heading towards a 5-year low on the Bloomberg Dollar Index, but analysts at Citibank think it could drop another 20% this year. That would take it to multi-decade lows, so I wouldn't necessarily wait that long on the trade. Instead, I would short it to maybe 5% or even 10% weaker at the most. The dollar traded around 85 on the index for most of 2010 through 2014 and touched there as well in the 70s and 90s, so I think you hit some support around that point. But just like we saw in that futures trade, even a 5% change in the underlying asset can mean a 40 or a 50% return on your Forex investment. And there are quite a few reasons why analysts think that the dollar can fall further. Persistent deficits racked up by the United States are a longer-term headwind to the greenback. We'll hit 100% debt to GDP this year, and it's just projected to get worse. Now, another reason here is just less uncertainty in the global economy could lead international money flows out of the US dollar to seek those higher yields in emerging market debt, as well as just less demand for dollars as a cash reserve against dollar-denominated debt globally. Now, Chair Powell at the Fed has all but promised that he's not going to touch interest rates, and incoming Treasury Secretary Yellen is just as dovish as he is. So I think the picture for interest rates here is fairly tame. That again should mean a weaker dollar demand for dollars. Now, against that outlook for the dollar, economies in Asia are undeniably stronger right now. So that kind of growth is just going to pull those currencies higher. The ECB tends to be more conservative as well with its monetary policy, so I think that could also support the euro against the dollar. Another 2 trading ideas here in penny stocks, and while I usually prefer a longer-term investing strategy, I found 2 penny stocks here for those short-term profits. First up here is Synchronos Technologies, ticker SNCR, a $129 million provider of cloud and software-based activation solutions for mobile users. And with these small companies, these small-cap penny stock companies, you always want to look at the addressable market. How big is the market they're selling into? This company is positioned as a leading cloud platform for mobile and ahead of what could be a boom in the 5G rollout. It brought on AT&T and TracFone as new customers last year, and 80% of revenue is from recurring customers. The company has 200 plus customers and more than 135 patents for a solid competitive advantage in cloud and messaging. A cost savings program last year helped it reduce operating costs by 17% and then drive positive EBITDA growth even on the slightly lower sales revenue. I like this one at least back up to its 52-week high of $6.50 a share, which alone would be a 121% return, but this one could run even further as that 5G ramps up. Next on our short-term penny stocks list is Elevate Credit, ticker ELVT, a $114 million online lender to non-prime borrowers in the United States and the UK. Now, I actually recommended Elevate back in July of last year when it was trading at $1.73 per share, so it's up 75% already, but could still have a lot of room to run. This entire lending industry has been hit hard last year. Investors have been worried that those lower credit score borrowers would default, leaving these fintech companies unprofitable. Against that pessimism, though, management is cutting expenses and repurchasing its own shares. Loan growth was probably weak last year, but is expected to rebound in the fourth quarter or early 2021 here, and this is one of those rare penny stocks that is actually already profitable. The business turned profitable in 2017 and booked triple-digit income growth in the last 2 years. Now, I like Elevate back up to around $4 a share, and there's a good chance it gets there in the next year or so and gets things back to normal. Trading Bitcoin can really either be a long-term or a short-term trade, so I want to show you how to value the investment and know when to jump in. Now, those of you in the nation know I haven't always been a big proponent of Bitcoin in the past, but have taken a position when the price gets closer to that fair value. In fact, in last year's video, I revealed that I had finally taken a position in Bitcoin when the price tanked to around $3,500 each, later selling at $6,500 for a 91% return in less than 5 months. There is no doubt about the future of the blockchain technology, and investor interest in Bitcoin has surged lately. You can still get rich with Bitcoin, but you need to know how to value the cryptocurrency. And for that, I use what's called Metcalfe's law. Now, this is a mathematical theory that says the value of any network is related to the square of the number of connected users. And that theory has been an amazing tool to value Bitcoin or really any platform that depends on the user network. This formula has been eerily accurate at predicting the value of social media stocks like Facebook, Twitter, and Pinterest. Basically, any company that has a network of users at the center of its business model, you can use this formula to value the investment. Now, Metcalfe's formula for this is to use the number of users squared, and we have the estimates for Bitcoin unique addresses or users in the range of 5 to 700,000 for 2020. So here you would take the square of each of those estimates to build a lower and an upper limit for the value of Bitcoin. That means between a market cap of 250 billion to 490 billion, or a fair value between 13,500 to 26,400 for Bitcoin. So this is going to be your range estimate for a fair value, as low as 13,500 for BTC to as high as 26,000, with an average actually right around where it's trading at now. So for those of you that are a little hesitant to buy into Bitcoin after the run that we've seen, if that price were to fall closer to that $13,000 or $14,000 range, there's probably going to be some support there, and you could feel more confident that it's going to get back up from there. Now, let's be clear though, I'm not going to be running out to put all my money in Bitcoin, just like I don't have everything in futures trading either. And for this trade, I'd wait until that oversold point, maybe even a little below the fair value, and then ride it back up to maybe 16 or 18,000 for a quick 30% profit. Click on the video to the right for those 5 options trading strategies. From option spreads to collars and straddles, everything you need to know to start trading options. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.